You just watched Micron explode 19% in a single session and felt that familiar burn in your chest. That electric urgency whispering you're missing out on life-changing wealth, that you're too slow, too cautious, too disciplined. Today, that feeling is about to cost you everything you've worked to build. Because right now, as MU rockets toward $900 a share, as Reddit explodes with gain screenshots, as your carefully constructed portfolio suddenly feels pathetic compared to those who jumped on the semiconductor wave, you're facing the most dangerous moment in any investor's journey. The moment when FOMO transforms from whisper to roar, when the market's siren song drowns out every principle you claim to believe. Look at these numbers. Micron up 19.29%, AMD climbing 7.78%, even RDW, a stock most people can't pronounce, surging 26%. Meanwhile, your diversified, thoughtful positions sit there like sleeping giants. Boring. Steady. Seemingly wrong. The social media feeds are brutal today. Screenshots of five-figure gains. Stories of overnight millionaires. Comment sections filled with "I told you so," and "Why didn't I buy more?" And somewhere in your mind, a voice starts calculating. If I had put 10,000 into MU 3 months ago, if I had listened to that podcast about semiconductor supercycles, if I had just been more aggressive. But here's what that voice won't tell you. For every screenshot of massive gains, there are 10,000 stories of devastating losses that never get posted. For every overnight millionaire, there are armies of investors who chased the last moonshot straight into financial ruin. The VIX sitting calm at 17 today, that's not celebrating with the momentum chasers. That's warning you something deeper is at play. This is where most investors break, where discipline dies and portfolios get destroyed. Not during market crashes, when fear keeps you paralyzed, but during moments like this, when missing out feels worse than losing everything. 2,000 years ago, a Roman emperor sat in his tent on the Germanic frontier, watching his generals celebrate a crushing victory over the barbarian tribes. Gold flowed into Roman coffers. Soldiers talked of eternal conquest. The momentum felt unstoppable. But Marcus Aurelius picked up his journal and wrote something that would save your portfolio today. How much trouble he avoids who does not look to see what his neighbor says or does, but only to what he does himself. Marcus wasn't just talking about avoiding gossip. He was describing the fundamental principle that separates wealthy investors from the destroyed masses. The discipline to ignore the crowd's euphoria and focus solely on your own strategic process. When Marcus wrote those words, Rome controlled the known world. The empire's expansion seemed infinite, unstoppable, destined to continue forever. Sound familiar? Every bubble in history has felt exactly like MU's surge today. Inevitable. Obvious. The new normal that only fools would miss. But Marcus understood something that modern investors forget in moments like this. External events, no matter how dramatic, cannot improve your character or your long-term wealth if you abandon the principles that got you here. The Germanic victories were real. Rome's power was genuine. But chasing momentum, whether in ancient conquests or modern semiconductors, destroys more fortunes than it creates. The best revenge is not to be like your enemy. Today, your enemy isn't the market. It's the part of yourself that measures success by someone else's gains instead of your own strategic progress. Every legendary investor shares this same moment. Buffett, watching the dot-com bubble explode around him while value investing seemed dead. Templeton holding cash while growth stocks doubled monthly in the late 90s. Munger buying boring businesses while everyone else chased concept stocks to the moon. They all felt the same burn you're feeling right now. The same whisper that they were missing the greatest opportunity of their lifetime. The same pressure to abandon everything they knew worked for the intoxicating promise of easy wealth. The silence between heartbeats when everything goes quiet. When the noise stops, When you realize the choice in front of you isn't about Micron, it's about who you become under pressure. The Stoic investor framework for moments like this has 3 non-negotiable pillars, and they've protected wealth through every bubble, crash, and mania for 2 millennia. First, the discipline of focus. Marcus taught that your attention is your most precious asset. Where you place your focus determines not just your investment returns, but the quality of your entire life. Today, while others obsess over MU's price action, you focus on business fundamentals. Not next week's momentum, but next decade's earnings power. Not the stock price, but the underlying value creation. This doesn't mean ignoring opportunities. It means filtering every opportunity through your predetermined criteria rather than letting market euphoria rewrite your standards. Micron might be a tremendous business. Semiconductors might be entering a golden age. But if it doesn't fit your established investment thesis, your portfolio allocation strategy, your risk management framework, then watching it moon is just entertainment, not a missed opportunity. Second, the discipline of time horizon. Marcus ruled an empire, but he thought in centuries, not quarters. The Stoic investor builds wealth the same way. While momentum traders celebrate today's gains, you're constructing tomorrow's financial independence. Every decision filtered through a simple question: will this matter in 20 years? MU's 19% surge feels monumental today. In 2 decades, it'll be a footnote in your investment journey, whether you participated or not. But the discipline you maintain today, the principles you uphold under pressure, the character you build by staying true to your strategy, that compounds forever. Third, the discipline of emotional independence. This is the hardest one, and the most crucial. Marcus wrote, "You have power over your mind, not outside events. Realize this, and you will find strength. Your wealth isn't determined by which stocks you own. It's determined by how you respond to market, volatility, social pressure, and your own psychological triggers. Every time you chase momentum, you're training your brain that external validation matters more than internal discipline. Every time you abandon your strategy for someone else's gains, you're weakening the mental muscles that create lasting wealth. Every time you let FOMO drive your decisions, you're choosing short-term relief over long-term prosperity. The wealthy investors you admire didn't get rich by chasing other people's winners. They got rich by being boringly consistent with their own proven approach year after year through every market cycle, regardless of what was trending. Here's what Marcus would do with today's MU surge. He'd acknowledge the impressive move without letting it disturb his inner equilibrium. He'd analyze whether semiconductors fit his investment criteria without being swayed by price momentum. He'd stick to his position sizing rules, even if the opportunity seemed obvious. And most importantly, he'd use this moment of market euphoria to strengthen his discipline, knowing that the investor who can resist FOMO during bull markets will have the capital and courage to buy during the inevitable downturns. The market will give you 1,000 reasons to abandon your principles this year. MU surge is just today's reason. Tomorrow it'll be something else. The Stoic investor builds a fortress of discipline that stands regardless of external chaos. Your wealth isn't built by catching every moonshot. It's built by never losing sight of your destination while others chase mirages in the desert. Marcus Aurelius conquered barbarian tribes, but he knew the greatest victory was conquering his own impulses. Today, you face the same choice. Chase the momentum and join the crowd, or maintain the discipline that creates lasting wealth. The VIX might be calm at 17, but your character is being forged in the fire of this very moment. Ancient wisdom reminds us that wealth belongs to those who can say no to today's euphoria for tomorrow's security. Modern markets haven't changed human nature. They've just given it bigger stages and louder voices. The Stoics had a word for what separates wealthy investors from the rest. Next video reveals it.